Good morning, everyone. Thanks for joining us. We're going to get started right at 9 a.m. We'll speak to you shortly. Okay, it is 9 a.m. I would like to welcome everyone to our monthly webinar series. My name is Ted Harris. I'm with the Pennsylvania Petroleum Association. We have done this webinar series since 2018. Normally do it as much as we can on a monthly basis. It's normally the first Tuesday of the month. We had our clay shoot yesterday, so we punted this to the first Wednesday of the month here for the month of April in 2025. But we typically for our webinar series, we normally have a mix of associate members that are subject matter experts in a wide range of areas, in addition to different government state agencies, for the most part state agencies, to talk about relevant any type of regulation change or anything that's pertinent to your business, but a big picture, a wide range of different topics that we hope is helpful for our membership in terms of broad education opportunities. So before we get started here today, just a couple quick housekeeping items from my end. Everyone that's going to be attending is on mute. With that being said, we would strongly encourage you to ask questions. And the way that you can do that is by using the question feature in GoToWebinar. We'd love for this to be interactive. John has a presentation, of course, here today, but we've seen in the past, the more kind of questions that come in and different levels of interaction, the better. I'm willing to bet if you have a question, there's probably some other people on the webinar here that might be thinking something similar. So no bad questions. Please feel free to ask them. And if it's something that's really specific to your business, I'm happy to connect you afterwards with John. I'm sure John will have his contact info up here as well. But if you want to have a one-on-one conversation, certainly encourage that afterwards. We will keep the questions anonymous for anything that does come in here today. So to kind of kick this off, I would like to introduce John Gilbert. John Gilbert is with QuellPay. QuellPay is a member of our association of the PPA. They're also our preferred partner for credit card processing. We at the association use them for our credit card processing and our various entities under the PPA umbrella. We made that transition to QuellPay, I believe, 3 years ago, and it's been a good experience for us. And I know John works with other PPA members that share the same positive feedback in that regard. So appreciate, John, the ongoing support from QuellPay, and appreciate this is not a QuellPay webinar per se in the sense of why QuellPay is better than credit card processor B. This is meant to be educational, like all of our webinars, but big picture, John, I appreciate the ongoing partnership in that capacity. So what John is going to be presenting today is leveraging payment data to drive smarter decisions, gain strategic insights, and increase profitability. You all have so many different touch points that you have with your customers throughout the year, certainly the last 4 months being a lot of that activity, but really excited today to kind of hear as you're collecting this data with whatever processor you're using, whatever back office software you're using, what are ways to leverage that and hopefully create more opportunities for you in the future to better your relationship with your customers. So John, I will pass it off to you.
Thanks, Ted. And hey, everyone. Thanks for the opportunity for me to talk here. This is, I think, the third or fourth webinar we've done, and what I like to do is just really take some of the information that I've gathered from the year and give it to you as tidbits of information. So a couple years ago, I talked about the State of the Union of Payments, which was talking about the newer technology that we had in the industry and how that really impacted your bottom line. And we've also done a conversation on surcharges, which I'll also be doing another conversation on at the NPGA Expo on Saturday, if any of you will be there. But when I was at the PPA fall conference this year, had a lot of conversations with marketers, and one of the common themes that we were talking about was data and reporting, and we had a lot of great questions. And so I just wanted to kind of provide just a little bit of an overview of some of the changes and some of the in the in the technology that we've had and the channels that you've added as marketers in order to support your business, and a couple of problems that this has caused, and then how you can quickly um, solve some of these problems with reporting, and also just gain a little bit extra insight. So I'm just hoping to show you a little bit under the hood from some trends that we've been seeing, and a couple of things that we can show you. And as Ted said, if you guys have any questions, please feel free to stop me here. So again, I'm the Director of Business Development at Qualpay. I'll be at the NPGA Expo this week, the PPA Expo, and the Fall Conference. I'll be at the Summer Leadership Conference as well, and the Eastern Energy Expo. So if you have any questions, you also have my contact information as well, but plenty of opportunities to see us through the year. If you've ever had seen a presentation from me, this is one of my first slides that I always include, just because it just shows how drastically technology changes over time, right? The first computer was the size of a street block, and now the technology that was in the first Apollo spacecraft is as big as a calculator. And now, if you take that into real times, if you in a video game sense, the football game that I grew up playing is much different than the game that my nephew now plays. And so not only can you customize the jersey colors and the faces and have all this extra detail, but there's also so much more you can do. And a lot of you who have taken over family businesses or has seen your business evolve, it might look as stark as this. And to put this in a payments perspective, in the last 100 or so years, this is what the technology evolution has started off. And so I'm sure most of you probably don't know what these things are on the left, but they were called charge plates. And you would basically run these things and at a Bloomingdale's and use your credit in order to buy goods and services. You still have to go in and pay the balance, which made it a little bit more inconvenient. But then in the 1950s, and then definitely a lot more in the 80s with the malls and so forth, they came out with the knuckle buster, which broke people's knuckles because you had to actually, just essentially make a carbon copy of the card on a piece of paper, which, as many of you now know, would be a major violation of PCI compliance because you're saving the full card information. So present day, we have much more secured options where card information is not stored. It's now tokenized instead of stored. And you can tap a phone in order to make these payments. And so super easy to do receipts, but obviously very, very stark, these differences here. And if you look at an energy marketer or a propane marketer, the tools that you use to support a business have evolved with your growth, right? So you started off with your retail shop. You might have gotten a knuckle buster terminal in that shop, but then you got some phone-based payments, a payment portal. You may have used another software company for this. You may have gotten your first website. Then all of a sudden you have these emails, invoices, and some alternative payments, maybe Apple Pay, text to pay, and so forth. And so what's really changed over the years is that payments are way more secure than they've ever been, and they're more integrated than they've ever been before. But what's also has caused a little bit of a problem here is that you have all these different ways that you started to accept cards, right? You might have a portal, an invoice, a POS, an IVR software, text to pay, Apple Pay, Google Pay. All of these different channels that you're now using could be coming from different vendors, right? Your POS terminal might be from one credit card company, have their own kind of set of fees. You might be using a portal company connected to a different software company and a different gateway company. And so what can happen is you start getting more and more data, right? And so to support some of these functions, we now have these uniting reference numbers called merchant reference number, purchase ID number, little bits of information that you can include when you're inputting these transactions to unite this data together. But what you might be seeing, or what your poor office manager may be seeing, are 7 different channels, 7 different reports, 7 different vendors, right? And the poor person who has to reconcile all of these things during the day, it can be a lot harder. And if we just take one more look at kind of the evolution here, you may have started off, you know, I like to think of these new products as kind of a Lego set. You may have gotten a software in the 70s or the 80s, and that acted as it changed the way that you did your business, because you now essentially had a software that was quarterbacking all of your data. And so you had a customer reference number or TRM that now saved all of your customer records. But when you made a payment, you were probably doing those payments and writing the information down on a piece of paper. So then came the customer vault, where the gateways came out and they allowed you to store this data securely. So you didn't have to write it down. It was now stored as a token number, just like when you went to the arcade, you put $1 in, you get 4 tokens instead of 4 quarters. These tokens represent the card, but it takes the burden of PCI compliance off of you. You know, someone breaks into your office, they can't steal all your credit card information. This information is encrypted in this customer vault. And so if you had a customer vault where you could save all of this information, the next evolution was a recurring payments, right? It's just a piece of software saying, I want to take this token and charge it then, charge it now. And with the addition of, after recurring payments, came this last little button here called account updater, which when you have a recurring payment that happens each month and a customer in a vault, this software can reach out to the card issuers, just like your Netflix account, and update any expired card info. So with all of these products now, you have a lot of flexibility on what you can do. And hopefully when you're using these products, you also have some reporting that you can use. And I want to show you kind of the reporting that you should expect and some things that you can do with it. So as I was saying before, you have all these different channels, and the way to unite all these channels is through either using a single vendor for all of this, or using merchant reference numbers where you can tie all this information in together. But you essentially want payment reconciliation, advanced reconciliation, to be able to find and sift through all of this data. And so what does that look like essentially? You should have a reporting dashboard that breaks down your transactions, your financial information, your disputes, and these other fun things you can do right here. And we'll go into these a little bit further. So your basic reconciliation reporting should have a breakdown of the batches that you did during the day, and also your total fees. And the nice thing about having all these batches is that you can click on there and see the individual card types that were accepted, all the individual transactions, and a bunch of different ways to sift through this information. And you can also see if it's been approved, declined, or submitted, and so forth. So that's just some basic information that you should have. The ability to look at your reconciliation report, which is just a list of all your batches, click into the batches for more information, and then click in that batch for the individual transaction info. Being able to dive this deep into your data allows you to provide a lot more information. On here, we have authorization info, we have chargeback info, and a bunch of merchant fields that you can look to sift through this information. And so what you can do with this info, and since all of these different batches here that were just collected, the batches that were in this report can also be sifted by profile type. So you can look to see who the software vendor is, what channel it is too. So not only can you sort this information by essentially the one day that you do it, you could also sort by every day that you've ever processed by a different source. And so this is just some real basic information, but we're kind of building on something. So the information that you can take right now is able to be sifted later to give you some pretty nice little insights. And so when we're talking about those Lego blocks earlier, they gave you tools to essentially proactively manage your customer accounts on record. And so what I mean by that is if you're using something like Account Updater, where you can automatically update expired credit cards, you should also be able to see a report where you can sort by expiration date. And so this is just a peek into your customer vault where your cardholder name would be entered right here. But if you sort by expiration date, you can sort and say, are there any cards essentially going to be expired in May? Because I have all these recurring payments that are going to be coming up. So when you run that report, you can see any kind of credit cards on file are going to be approaching expiration date. And so you could reach out to them to update the card info, or you could just press a button for the account updater and see if you can update that credit card. But knowing this in advance is a huge way just to be proactive and saying, all right, we know this, we already know this transaction is coming up. Might as well see if the card's still valid, right? It doesn't take you, it takes you 3 seconds to run a report like this. Another report that you could also run is just a failed payments report. If you're running these recurring payments, you want to know very quickly if any of the recurring payments may have failed after the fact. What you could also gain from an insight from here is just seeing, going by customer type, are there certain customers who've maybe have more failures than others? They might be fat fingering or so forth, and maybe they need a more consultative approach, or maybe you have a whole channel. Maybe your online payment page has way more declines than the other ones, and so sorting a report by the channel can help you get approval percentages, fail percentages, and so forth. But not only that, you should also be able to find insights on why these cards are declining. Is the card expired? Has it been deactivated? Is it over its limit? Does the issuer see suspicious activity? All these codes will be in the transactional detail right over there. So you'll be able to essentially just proactively manage what's going on with these accounts and take action. I would say the newest reporting that most people do not know or kind of understand how to use is what's called cost allocation reporting. And this is really important if you're a larger marketer and you have multiple divisions and you want to compare these divisions against each other. Or maybe you're a company that's doing acquisitions and you may have purchased a new property and now you have them using your products and services, and you want to see how this new division or new property is comparing versus the other ones. So what a cost allocation report is going to tell you is it's going to be able to break down by location how many sales it has, but also the cost allocation based on the card cost. So a cost allocation report, it's going to be able to show you across any kind of departments, products, services, usage or benefit. And it's going to allow you to manage divisional performance, not only by credit card data, but by ACH data as well. And so one of these things that you might be able to say is, why are these, if our rate, our effective rate in this particular part of it, our division is more expensive, we could start looking into the card data. What types of cards are being used? Are they using commercial cards? Are they using debit cards and so forth? And being able to really drill down to the exact cost of not only the branch, but the individual customers. And so if you want to take this one step closer, instead of just looking at the division, you can also start looking into cost per delivery by your customer name. And so you can look into your interchange fees based on the card holder and see how expensive the cards that this card holder are using. And this can be really important if you have say different divisions here, I know that some of you are always kind of to find additional information about someone, right? Do they live in the outskirts of town where, it costs an extra $11 for gas in order to deliver to this person, right? Well, how about knowing whether, the card that they used on file cost you 20 bucks or cost you 75 cents? Because there can be that much of a variance based on the card, on whether it's a commercial card, a business card, an Amex, or a Visa. And so you can start taking looks at this data and seeing, hey, how can we lower these fees? Are you in an area where people are using more Visa cards, right? The most expensive card, maybe your average transaction is around 2%. Well, rolling out American Express, if you didn't have that before, can substantially lower your cost by, having essentially a $1.50 flat fee instead of a 2% percentage fee, just because of the interchange fees of this. So being able to drill down to your customer level and seeing how much the cards cost that they accept can help you make a decision. Do we want to price our oil or propane a little bit more expensive here? Do we want to add a surcharge, right? Hey, our commercial customers are really costing us a lot of money. This guy always wants to pay with his Visa signature business card, and it's costing us $20. Maybe we'll charge them $20 for to accept that payment. They're getting the points on their card, you're getting the money back, and everybody's happy. And so it's just giving you a little bit of more data, being able to drill down, not only from a divisional level and splitting it up by the software company that you're using. So you could say, hey, how much are our Cargus payments costing us versus our Destwin payments versus our Silverline payments versus our point POS system that we have in the office. You can compare and contrast all of these things. And what also can help you as well when you're looking at this information is using, someone like me who can basically tell you whether these benchmarks that you have are better or worse than your competition, right? And just kind of giving you essentially just kind of a 100-foot view of what you're doing and what your payment health is. So if some of this stuff is looking kind of foreign to you, you might have what's called, the reconciliation blues, which we talk about having multiple vendors for various sales channels, and you need to pull these reports from each vendor daily, having different costs between vendors, or not able to search through your transactions and having fragmented data. If you want to solve the reconciliation blues, you can get a reconciliation report that essentially allows you to see all this data in one glance, or just by customized reports. Press a button here for your daily declines, press a button here for this sales channel, here. Just essentially having all your batch history, not only organized by day, but being able to sift through that again by channel to give you that cost allocation reporting. And something that we didn't go through is just kind of having a dispute dashboard as well, to be able to respond to chargebacks and so forth. But in this industry, a lot of the times, disputes are very, very uncommon. Much less than a half of a percent. Then of course, just seeing all the credits and debits made to your depository bank account info, right? It's much easier when you're getting your bulk payment and all the fees that you ran, seeing a nice little report showing the amount you processed, the amount that hit your bank account, and being able to know exactly when they hit your bank account. It's just a nice thing to have. So that is essentially the reporting presentation in a nutshell. I do just want to include a couple of just two different extra bonus slides that I always include, just to talk about the cost of doing business for an energy marketer. The biggest fee that all of you pay, if you looked at your statements, are interchange fees. These are the fees that you pay to the card brands. So when someone hands you a Visa card, if it's a Visa signature card, that's costing you 1.65%. If it's a Visa debit card, it can cost you 0.05%. These cards make a huge difference on your bill. And the one report that all of you should get every year is an audit, because it's going to show you the interchange cost of what you might be getting, these 2% and so forth in the bottom of your statement, and what life could look like on the other side. So it's always good just to have a good understanding of your cost allocation reporting across your business, and always look at that data, look at the sales channels, look at the decline reports, be proactive. But also, you should also know if you're doing everything you can just to pay the lowest rates. And so having all of that data available from this report, it can help you compare and contrast. But it's also just always a good idea just to talk to an expert and ask questions. You know, how are we holding up? Are there any new rates? You know, there's a couple of big interchange updates that are going to be coming out this fall, that are going to have a pretty big effect on the business cards that you accept. And so there are some cost-cutting measures that you can take place in order to lower those costs. So I hope that wasn't too much information too quickly, but if it was, always happy to walk this over one-on-one. Please feel free to ask questions, and I do believe that we'll have this up on YouTube as well if you guys want to see this again. So thank you very much. And again, I'll be at the NPGA Expo this weekend, and Eastern Energy Expo in a couple of months, and the PPA annual conference this fall.
Thanks, John. One question that I have, and I think that hopefully this will be helpful for people that are on the phone. Can you have companies that are probably very honed in on looking at the data that you're referring to and the different capacities of that, and you have probably some companies out there where it's a set it and forget it model. We've been doing this for 5 years and we really haven't looked at it. Can you kind of try and quantify for, let's say it's a 2 million gallon heating oil, 1 million gallon propane company, 3 million gallons all in, like what type of there's certain processing fees you cannot control, right? But if the companies that are doing this the best, right, like what type of savings you're looking at to really be on top of all aspects as it relates to credit card processing and data.
Yeah, it's a great question, Ted. There's a lot of companies did quite a bit 10, 15 years ago by getting utility rates. A lot of marketers don't know that there was a new American Express utility rate that came out 3 years ago. And just to show you kind of a contrast of the effect that this would have, if you were on the old Amex rate and you ran $1,000 transaction, it cost you $30. If you're now running that same transaction on Amex, it would actually cost you $1.50. So that's one pretty stark difference. But what I am actually seeing is a lot of marketers say, hey, we have these utility rates, we're all set. But there's another kind of rate that doesn't qualify for utility rates. So if you accept business cards or commercial cards at your business, and that's to say, you're, instead of delivering to a residential home, you're delivering to, a school, a business, or, a building or so forth. The cards that those cardholders use are what are called commercial cards. And the card issuers are expecting certain data to be accepted on that transaction. They want an invoice number, tax information, and so forth. And what we find in these audits is that these processors aren't passing this info, and so these cards are getting downgraded by almost 1%, which is 30% of their cost. And so if you're doing $3-4 million a year, in these kind of payments, the additional fees that you're paying are $5,000 to $25,000 extra in fees. So it's really substantial, and a lot of marketers are thinking that they're getting these lower rates, but they're not. And so because these commercial cards do not qualify for utility rates. And so you need a certain type of processor that can template these transactions in a way to pass this extra data through.
Thank you. So depending on the application, depending on the size of the business, you're talking, potential tens of thousands of dollars savings here. Is that accurate? And obviously it depends on the scenario.
It does, absolutely. It's a company doing $5 million a year in volume. It could, I've seen $20,000 to $50,000 off of annual fees. We saved one company $500,000. They were quite large, but it just goes to show some of these larger companies think that they're getting these deals from their bank when it's not the bank that they're paying these fees to. It's the credit card companies. It's the credit card, Visa, MasterCard, American Express, Discover, where you're paying these fees to. And by passing this extra data, it's like having a Costco card. You scan the card, you pay a different fee when when the card goes through. So it can really be eye-opening. So I highly encourage anyone just to get an audit, just to see what your rates are versus what you should expect.
All right. Well, thank you, John. I appreciate it. We don't have any questions that came in here at the moment beyond the one that I asked. So I think we'll wrap up with that. And John, like I said, John's information is on the screen. If you do want to speak to him directly, please do so. Yeah, if you're going to MPGA this weekend, definitely say hello. But selfishly, if you're going to our summer leadership conference or the fall conference later this year, as John alluded to, he'll be at that too. So we hope to see you at those events. All right. Well, thank you all. I appreciate your time here today. John, thank you for the subject matter expertise, and I hope you all have a great rest of the day. And we will be putting this on our YouTube channel for anyone that wants to view it in a larger capacity. Thank you all.